Hello, 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 everyone. Happy Thursday. Happy Unemployment Thursday and Fed Thursday meeting today on Thursday, delayed one day. Good morning. Good morning. Good morning, Jacob. Good morning, Patrick. Good morning, Mark. Good morning, McRangers. Good morning, Daniel. Good morning, Kalani. Thank you for being here. Thank you for the super chat. Bitcoin's all time high. I think you meant life is good. Life, you know what? We shall see. Life is good every day. Every day above ground is a good day. Uh, by the way, Sterling will not be here for a few days. He is having surgery today. So, I'm sending thoughts and prayers. Send positive energy. Whatever your belief system is, send something good to Sterling. Send something good to Sterling. Okay? Because he's got surgery, then he's got some recovery to do. So, he'll be back in here after he's recovers a bit. But please, I ask you that. He's been a great member here. He helps out with putting in all the news, which he does completely for free because his channel doesn't make any money. So so just again, if you happen to think of him today, just send him positive energy and the best, please. Good morning, Royal Palms. We can look at C. Good morning, Ted. Good morning, Anissa. That's my only request. Shouldn't be a tough request. All right. So the market keeps on marching on. Qualcomm yesterday was a beat. Yes, thank you. Thank you, Royal Palms. That's wonderful. Please do exactly that. And hit the like, everyone. Thanks, Royal Palms. I really appreciate everybody who tunes in and day out to listen to me ramble on. And hopefully it provides value to everybody. Just please, I wish we could get some more people coming in, but you know what? We have a wonderful core group. We're still getting an occasional subscriber, somebody who joins the channel. But that's enough said about that. People still recovering from the Trump win. People who did not vote for Trump are melting down. The markets are melting up. I keep seeing this as the start of a new bull market. That would be very fascinating. From either we'd have to have the multiples absolutely drop based off of corporate new record corporate earnings. Remember, Trump doesn't even get sworn in till what, January 20th? And then, do we even have the results of the House yet? Because I know the Senate has flipped Republican. I don't know about the House. I don't think that's fully decided yet, unless I'm wrong and missed something. But we still have some, I mean, for the people who are all, decreased taxes, the spending's going to be a big thing because you see the 10-year keep climbing. There's a lot that's still out of the administration's control, and they're not even in office yet. So the melt up will continue. I'm still expecting this to tag at least 6K, if not 6,100 before year end. NASDAQ rocketing. Everything's in celebratory mode. Just know where your stops are. Know where your short term stops, know where your medium term stops, and know where your longer term stops are. The house stayed red. Thank you, McRangers. I'm surprised he isn't here too. Hey, Charles. Yeah, thank you, Anissa, for wishing the best of health for Sterling. All right. So we had jobless claims. Jobless claims coming in pretty much at consensus. The initial jobless claims, the continuing jobless claims continuing to creep up. I know they're going to cite this, but we don't have, with this 10-year yield, 4.83. Yesterday hit 4.45. We got the big thing with today is going to be J Pow, but the continuous jobless claims keep creeping up higher and higher. So people aren't finding jobs as quickly. Now, do I think the Fed should just slash rates back down? No, I think we're going to get embedded inflation. Remember, core inflation is nowhere near. And yeah, food and energy are volatile. But if we get something still going on in the Middle East and oil shoots back up, you got inflation with core running hot. It's not good. But this is why I don't think they should have a dual mandate. Their initial mandate was price stability. And price stability, if you read the original Fed charter, you know what price stability was? And I don't know how they can get away from this. It's actually worded inflation at 0. Average should be 0, not 2. So go back, read the original Fed charter. And it's never been revised from that. They've just decided now 2 is the magic number. So 2 p.m. Eastern, you have the interest rate decision, which is baked in for a quarter point cut. You can see here, quarter point cut. They're not doing a half. It's baked in at a quarter point. So everybody, oh, what if they surprise with a half? No, not happening. And the bigger thing is the press conference. The press conference, is it going to be maybe we have to wait and see with some of the stuff, or are they just going to charge full ahead and do another rate cut in December? And then I'm interested to see what they're projecting with that. So that's the biggie for me, the press conference at 2:30 Eastern. Then remember, tomorrow morning we get the inflation expectations and consumer confidence. So the map this morning, mega caps still pretty green. Still pretty green. Financials taking a little breather today, but nothing to talk about there. You have Qualcomm up 5.35 after a beat with earnings, lifting the whole chip sector up. The groups, let's just refresh this here. Everything's positive except financials. Will turn slightly negative, but your basic materials after gold selling off, silver selling off, copper selling off, looking to get a little bounce. This is what I'm talking about now. We're watching the secondary reaction. I also recorded Futures Edge yesterday with Jim and Bob. Should be out hopefully early next week. So watch for that because we did talk about copper and gold a fair amount. So you're going to want to tune in for that. Fed watch again, quarter point. We're back all the way from fear mode to greed mode. One day all back to greed, and Schiller PE 3778 approaching the highs from October 2021. By the way, there's there's right before the crash of 29, and there's right before the .com. Could we get back up there? Theoretically, I guess. But it never ends well. It never ends well. Thanks, Tony. I'll convey, I'll text Sterling later today and let him know. All right? Oh, Sterling, here you are. Surgery Day 12. Thanks so much for the wishes and prayers, Path Trading Partners family. You're very welcome. I let everybody know. Thank you for popping in, Sterling. So if you have anything, again, give your wishes and best to Sterling. We will miss you, but we want you to recover fully and properly. Now, to the markets, I'm using the prior harmonic area 5,900 to 5,920 is key support on any pullback. 59.94 to 6K is the next target area to the upside, and then above there you have 60.60. The other thing I am watching, on a continued march higher, we get cycles probably topping early next week on the daily. So, and we have a significant upper trend line in this area. So I'm watching to see here. We had the little pullback here, a follow through with last week's break above. We got the percent beat buy, technically before the election, because we closed above Tuesday's or Monday's high on Tuesday. And then we're also, when we broke above last week's buy high, we got a rotation potential buy, which is definitely going to close above last week unless something shocking comes out. One note of caution, this is continued. I talked about this. We pulled back in the rotation zone, rotated up, pulled back in the rotation zone, never closed below the rotation zone, rotated up, closed right at the rotation zone, rotated up, into the rotation zone, rotated up. So really, there's some early warning signs, but 56.50 would be if we do tip over and close below that at this point, that would be take us back into caution mode and something is brewing. We're nowhere near that. And also, we're still stair-stepping lower with divergences. Every push higher is losing momentum. Okay, can it continue to keep going? Yes, that's why know where your stops are from your other time frames. Whatever time frame you're trading. The NASDAQ. New highs in the NASDAQ as of today. Taking out the highs back from July. We still do have a massive potential double top in there. We've hit the next minor harmonics. The next major harmonic above 21,000 is around 21,450. So keep that in mind. The key support is coming back at 20,600, 20,635. So there's some other things I talk about with the daily and weekly 200 moving averages on Futures Edge. So once I'm not going to repeat them here, but tune in for that. The Dow taking a slight little breather, coming up to the 44K harmonic and pausing there. If it goes through there, 44,211. So 44,200 is the next harmonic area. Above there, the next major harmonic is all the way at 44,8. 44,8. All right, there's not much to talk about. Key support now in the Dow's back at 43,550. Russell, we do have a little mini double top, which can be traded on the 1 or 4 hour. So if the Russell peters out, okay, and then closes on a 1 hour basis, again, not a trade recommendation, just pointing something out for the people trying to learn. It is against the rotation zones. If it closes below 2,359.6, so 2,359, it would be a potential pullback, potentially to the prior breakout zone and the rising daily thing. Now, that doesn't have to trigger, but that's something to key watch for. What is this? That's interesting. That's very interesting. All right. What else do we have? One piece of news. We're going to get to Sterling's one piece of news. JP Morgan now expects the Fed to cut interest rates at a quarterly pace after the December policy meeting until the Fed funds rates reach 3.5. Well, let's see if they're going to be able to do that even. But so that implies that they're going to do their next cut in December, and then a quarterly pace would be March, I guess, and then June of next year. So we shall see. Best laid plans. You know what they say about that. By the way, the VIX. No, I'm sorry. Back to the Russell real quick. Back to the Russell. The all-time highs are still at 2460. So that's still a key magnet price over the next little bit. But the Russell acting like all the small caps are just going to be fine and dandy. DAX, the good old DAX, still caught in the range. Let me get back zooming in. But the key level to watch on an upward closing basis, I have to revise these levels to here. And I'm shifting it to reverse harmonics. The key thing to watch in the short term is if the DAX can close above 19,534. Other than that, still in consolidation. The notes, after rolling over big yesterday, taking a little reprieve, but key resistance is now back at 110. Also, we do have a divergence of waning momentum here, so I will be watching, especially after the press conference today, to see if we can get some kind of short-term bottom in the notes and some kind of short-term top in the yield. All right. So Yields coming back into a very key support area around 4.35. Hopefully we'll be able to do the next harmonic projection higher. The next key thing higher takes us to the cluster at about 4.58 to 4.93 and then 4.68 if this rally continues. Remember, the rotation zone is now back at about 4.32, so I'd be watching 4.32 to 4.35 for key support. Dollar index after the big day yesterday, reversing today, coming back down to key support right here. So little short-term big reversal in the dollar index. Let's see if this holds. And then we get some kind of setup over the next couple of days for a resumptive buy, or if we were putting in a short-term top after it got a little overheated. Crude. I found yesterday's price action very, very interesting. Sold off and then bought back up. There's some buying pressure in crude. We'll have to wait for futures edge for my longer term thoughts, but there's definitely buying pressure in here. So I am still looking for some buy setups. However, on any key follow through, we've got to get above 73.60 on a closing basis, at least a daily closing basis. Gold finishing I put up the upward sloping neckline. It doesn't matter whether you're doing a flat neckline or upward sloping, it would have hit the targets anyways. I can pull those off. We held yesterday on the 50, dipping below it, the 50 EMA, dipping below it slightly here and now rallying back up. However, this is the secondary reaction I'm watching for. At this point, for me to get back into short-term, more aggressive bull mode, this bounce has to get back above 2745. And look at that. That's right at this area of the breakdown zone. And between the 50 and the 62.5, if we can't get above there and roll over again, we could be putting in a more medium-term top and setting up a bigger potential head and shoulders pattern with a shoulder, a head, and a potential shoulder. That would pretty much be off the table, though, if we closed above 27.45 over the next few days, with daily cycles getting to the bottom. Let's look at Citi real quick for Royal Palms. Citi with the gap up nearly to the next key harmonic cluster. Pulling back again, your key support is now coming in about 67.50. Very key support that you're going to want this. You're going to want 67 to 67.50 to hold for the bull case here. Okay? You're going to want to see that hold right now. And then you have your very key resistance shelf. If I take these harmonics and we go to here now, the next big pausing area, we have this very key area right around 74 to 75. So on any bull case, that would be the next major target. The minor one would be 71.50. Let's take a look at that weekly. So on the weekly, this will give better clarification. Now, all the financials they're taking a breather from yesterday, but they went in a super rah-rah mode for Trump. So now, you're going to want this to keep holding on the longer term basis, but I'm really watching that this upper area, especially above this key recent major weekly high at 67.80. So on the longer term, on any pullback, 67.80 would be key. Pretty on Microsoft. I mean, Microsoft is still sitting in major consolidation. I'm going to be watching for another rollover in Microsoft unless there's a big unless here. You see here the 62.5 level at 437.31. We do have a gap left behind. But that's in front of this 62.5. So for longer term, if it pops back up, especially between 427 and 436, and then rolls back over, that would get me concerned, especially that if it rolls over and goes back down below this 406 level. Now, that being said, if it can get a close above 437, technically 437.31, because yeah, it closed above here, but it was on a downward candle. All right, and that formed a little mini double top. You want to close above that on an upward candle. If that were to happen, then I'd set the magnet price back to about 458. If that can't happen and then it breaks below this key support level, I'd be considering what your long-term stops are. And we could be starting to get some market pain. But until that happens, it's just in consolidation. Sterling, aren't you supposed to be like resting, preparing for your surgery? Maybe take a look at XPI. I'm seeing a triggered monthly double bottom and think the sector could be see some growth. We will do that while you're still here. XPI. I mean, we still this because it triggered the double. By the way, if you're learning that back rule of thumb, if a double triggers, it doesn't matter how long it takes to complete. Okay? So you have this. Let me change. Why? Hold on. Let me do one thing here. You have this. All right. This formed a double that triggered. So it doesn't matter how long this goes to the right-hand side. You don't count the bars anymore. This can take a while, but look at this on a monthly perspective. It did trigger a double back in February, pulled back, but now in that same area. And what's this doing? This is building sort of a rising wedge pattern against some very key support. So if this does break out, you still have your next key target is about 111, then right at the 50 harmonic, 118, and then your final target is still in front of the 62.5. So, and you have a major breakdown zone right here. So I would still be very positive on XBI. It's just taking a while to form a strong base. It came down double bottomed on the monthly, now forming a rising wedge pattern, trying to break through this multi-top area after triggering the double. So yes, that is very positive. Still, can anything happen? Yes, but that is a nice chart formation. Now, if it started breaking back down below this 82 area, no. So I know where I'd have to keep a longer term stop, and there's plenty of upside, even with this, to get reward to risk. In the shorter term, even this, the 200 is very key as an area for a stop. Because you see how it found support there? It's been riding above it, and you got a minor retracement harmonic right here. So roughly even keeping a stop below 94 in the shorter term for any other positions to get reward to risk could be valid. Silver, same sort of thing with gold. Silver on the secondary reaction now. In order to remain short-term bullish mode, has to get above 33.50. 33.50. So any buy setups would have to then get above 33.50 because there's now some overhead resistance, especially at 32.50. So it's got to do some heavy lifting. So if you're looking on any buy setups from the stuff I follow, it's got to get back above 33.50. No, after it triggers, it either has to hit the stop level or hit the target level. There's no, I've seen these things take, I mean, if there was a monthly double, I've seen them complete in a couple months. I've seen them take over a year or longer. That doesn't mean, now this can be, if it's a monthly pattern, it can take a long time. I've seen there, that's where there's no set definitive in all the testing I've done. Yes, the longer it takes, you know, they still complete at nearly the same percentage. It's just sitting through the time frame, and the time frames were all over. The distribution plot and the time frames were all over. So I can't really get. I wish I had a rule. Timing is the hardest thing besides high to high and low to high ratios and everything on shorter term stuff. Timing in the longer term gets really inconsistent. By the way, the yen closing above the 62.5, so I'm going to still be watching. Still be watching for weaker yen, even with this little pullback. Weaker yen. We followed through with a %B buy, and now we're pulling back to key support. Oops. Don't move that one. I wanted this one. Coming back in the key support with a rising rotation zone. So I'm still watching higher for longer with the yen. The euro bouncing into resistance. I'm really curious to see where this closes today. Where it closes. So we have that. Bitcoin coming up to our next harmonic area. If it continues to break out higher, the next key levels on this are 78.9 to 80,000. 78.9 to 80,000. By the way, with Bitcoin, be very careful. Be very careful. I know everybody's in super rah-rah mode. We could be completing, and this could easily go higher still from here. We could be completing a very strong end of wave count coming up in the next couple months. Okay? That does not mean it has to collapse. But know where your stops are from more than medium term. Until then, it is higher, and we can easily still go higher from here. Just a little thing that we could be making. You can follow the long-term gold to silver ratio. I don't want to get into that right now. We're getting very long into the open. So we'll talk about that at another point. Maybe I'll put up the ratio chart for silver to gold. And silver, because of that ratio, silver should outperform gold. But remember, how it outperforms gold, could gold drop more and silver hang in there? Yes. Could gold pause and silver start ripping to the upside? Yes. But right now, based off the long-term ratio chart, silver should outperform gold in some way, shape, or form. There's your answer right there. Why am I looking? I didn't want Bitcoin. I won the S&P. I'm just curious to see where this opened with the tick. Nah, not another strong opening. I mean, for the amount of strength we have not had, this was consistent buying, but not a lot of exuberant buying. So, I mean, the trend is still up. Just remember the rate hike and press conference, it generally goes choppier, especially at going into European close. So keep that in mind. And again, your key support is about 5,900 to 5,920 on any pullback. If it just skyrockets higher from here after the press conference, if we have very dovish Powell, 60-60 would be the target I'd utilize. MJ, Intel. Intel did complete its double bottom. Thank you for pointing that out. I did not look at that today, but Intel did complete the full double bottom. So there you go. Even with the earnings miss on EPS, that's why I follow the technicals. Still technically completed. So what's the next thing? Remember, you still have gap left behind, but sitting right at this 37.5 harmonic. This 37.5 harmonic, I'd be watching for, if it comes back into support, 2370 to 24. That's going to be your key support that has to hold in the short term. If it then holds and then rotates back up, my next target would be around 2785 in front of the full gap fill. And then if it managed to do a full gap fill, that's in the rollover zone. So I get more aggressively raising a stop unless it can follow through with a close above 30. But look where the ride declining 200, and they're still having issues. So I keep that in mind. If you played the double, it did hit the full target. If you're trying to go for more, you can easily keep that stop, right below this key support area. Yeah, one day you will fill that gap. There you go. 62.5 for the gap was my reference. You guys are just too good. And if you were doing the gap harmonics, that's what he's talking about is the gap harmonics, which I haven't covered in a while. So for some of the longer term people here, look at that gap harmonic right there with the end of the double. So you take the price, the closing price from the gap that left behind, and then it kept making lower, so you're going to trail this lower, and that was a key magnet price, the gap harmonic. That's what he was talking about. So it's completed that too. Very good. XBI secondary move. This is really making, and I know we just covered this already, but this is really making a tight top, even on a pullback to 100. Just really keep an eye. If you're looking for something, again, that has a strong potential to run sometime over the next little bit, keep an eye on the XBI. Can't give trading advice, but it's something I'd put on a watch screen. MJ loves the gap fill harmonic, so I'm glad I could teach that too. I really hope everyone here has learned something for all the time that we've spent together. I really hope you have learned something and been able to apply even one thing to your trading. Oops, did I mess that up? Let's see, we're right around there. All right, that's where I'll leave it. Thank you everybody again for the thoughts and prayers for Sterling. Really appreciate it. Once I get some updates from him, I will give everybody updates in the room. I will be back tomorrow for consumer sentiment numbers and wrapping up this very, very strong week in the markets. Until then, have a wonderful day. Bye for now.